What's up guys, Adrian here. Welcome to another video. Once again, it's time to unveil my entire portfolio from A to Z. So if you're new to the channel or newer to the channel, welcome. The mission of this channel, my mission is to help everyday, normal, ordinary, hardworking people to invest on their own so they could build their own stream of passive income to enhance their quality of life and eventually become financially independent or financially free. But instead of just talking about it, I actually show you how we did it and how we're currently doing it, because we've been living the dream since December 2019. So I know you guys really appreciate my complete openness and honesty about my personal portfolio, something many investing YouTubers don't do. Myself, on the other hand, I try to keep you guys appraised of my personal portfolio every single month so you can actually follow my journey in real time, right? So if you're watching this video, make sure you're watching the latest portfolio update, because I usually do one every month. So this video is update number 9 for October 2021. I actually have a YouTube playlist specifically dedicated to all my portfolio unveil videos. So make sure you check out that playlist if ever you want to see my entire journey, which I've been sharing with the whole world. So if you invest on the Canadian or on the American or US stock market and you like this type of content, if you're thinking about investing on your own or already investing on your own and financial independence is really important to you, please consider subscribing to my channel, because my investing style, the income investing style, which I'll talk about in a minute, is really the best and fastest way to achieve financial freedom, in my opinion. So just a quick summary of my investment strategy and a few important reminders before I show you guys everything. Please listen to this part if you're newer to the channel, because I will cover many of the questions that I get. So this should answer most of them. If you heard all this before, you could always skip the portfolio using the YouTube chapters in the description. So first of all, I'm Canadian, guys. So almost all the funds and stocks in the portfolio that I'm about to show you are listed on the Canadian stock market, the TSX. The number one question I get from Americans or people outside of North America is that they can't find any of these stock symbols that I'm talking about. So I repeat, these are Canadian listed funds. So not all brokers outside of Canada can access these stocks, right? If you're American, I personally wouldn't invest in Canadian listed funds. Not only will there be additional taxes to pay, but you guys have the best stock market in the world already. So it doesn't really make sense for me to invest in a foreign stock market. My income focused investing strategy can easily be replicated with funds on the US stock market. So I actually have a YouTube playlist just for US listed funds that I talk about. So make sure to check that out if you're American or you invest primarily on the US stock market. Now, a quick note about my investing style, my investing strategy. I am a long-term buy and hold, keyword hold, income focused or income oriented investor. So the primary objective of this strategy is to generate high and consistent passive income via dividends and distributions every single month as safely as possible. So most, if not all, my returns, guys, does not come from capital appreciation or share price upside. It comes from the income, the consistent income that my portfolio generates. So I know this is a hard concept for some people to understand, because all you ever see and read in the media is growth, right? Share prices going up. But basically my style is different. I get my return with the income, not share price appreciation. There's another way to make money in the stock market besides capital appreciation, where you don't really care about the stock market or what the stock prices are doing. My way. So how do we achieve this safe income? Well, my portfolio primarily holds funds that invest in blue chip corporations, right? Blue chip companies, and that use an income enhancing strategy like covered calls or leverage. So these types of funds provide consistent income, and the intent is really to hold them, not trade them or sell them later on for a profit, but to really hold them forever and simply collect the income or the passive income forever. So this strategy enabled my wife and I to become financially independent in our mid-30s back in December 2019. So you can check out my financial freedom video if ever you want to see our whole journey. It's an older video, but the information is still valid. So my strategy is really not that fun or exciting or mainstream, but I promise you that it works. You just need to stay focused and disciplined. slow and steady does win the rat race, right? Also keep in mind, I'm not against the growth strategy, the mainstream growth strategy where you could just buy the popular index funds from Vanguard or iShares. And I'm not against the other popular strategy, which is the dividend growth strategy, where you either hold single dividend stocks or dividend themed ETFs. Whether it's income, growth, or dividend growth or dividend focus, they all work long term. So 4 quick reminders now before I show you everything. Number 1, what I'm about to unveil to you is my main portfolio and is made up of a combination of 4 investing accounts. My TFSA account, my wife's TFSA account, my cash account or non-registered cash account, and my wife's non-registered cash account. So the income it generates, these 4 accounts generates, is really what we use to pay all our living expenses. So the dividends and distributions are extracted every month and sent straight to our bank account, which means we don't use the drip for these accounts. In terms of taxes, obviously any income that comes from our TFSA accounts, which is about 20% of the income, is all tax-free. The other 80%, which comes from the cash accounts, is obviously taxed, right? But because we contribute regularly to our RRSP accounts, our retirement accounts, and because the funds that we invest in are very tax efficient, and because we don't have any salary income coming in, we barely pay any taxes on any of this income. So it really helps. Those 3 factors really help. So the RRSP, guys, is a very powerful tool in that regard, right? Because it lowers your income dollar for dollar, and especially even if you have no salary income, it helps as well because it lowers your tax bracket. Number 2, the portfolio does not include our retirement accounts, our RRSP accounts. Those are completely separate, and I have another video covering our 2 RRSP accounts. I actually just released an update a few weeks ago, and it's in the same playlist if ever you want to check that out. So as you know, they're retirement accounts, so they're not designed to extract the income because you get penalized and there's withholding taxes. Those accounts, the RRSP accounts, it's really to grow a nest egg, and which you use later on. So the RSPs are not included in this portfolio. Number 3, I will quickly show you my 4 investing accounts directly online in my broker, with the TD broker that I use, so you could actually see in black and white how my money is doing, how the capital is doing. And then I will show you a big Excel spreadsheet, which is all the combination of these 4 accounts together. And last but not least, number 4, you could actually download the spreadsheet that I'm about to show you. So all the information about my portfolio for free on my website, passiveincomeinvesting.ca. So you just go at the top, free tools and resources, and it's the very first download. So I know it's going to be a little bit small because it's Excel on the screen, so you could always download it and follow me together here. So without further ado, let's check out my entire portfolio from A to Z. All right, guys, as usual, let's go through my 4 investing accounts here. So this is my cash account, my non-registered account. So as you could see, I'm up here about 19% or 57,000. Not that I really care because I'm a buy and hold investor, like I keep telling you guys. It says unrealized here. So this amount changes basically every day with the stock market, and I'm actually doing this right when the stock market closed. And let me just refresh here. You'll see this number change here, just so I'm proving to you that what I'm showing you is real here. So yeah, there you go. The numbers change. So I sorted them from my biggest losses or unrealized losses. Let me rephrase that to my big winners, right? So as you could see, I'm down pretty much $2,000 or 20% on one of the only speculative funds that I own, the HMMJ, which deals with cannabis. But don't worry about looking at this. I will show you guys everything consolidated in the Excel file in just a minute. This is just basically to prove to you that what I'm telling you is real. And yeah, CGXF, of course, I'm down on $1,900 or 7.73%. It did pretty good. So I'm filming this on October the 13th, which is not a really great day in history. But whatever. So CGXF, so I've gotten a lot of Facebook questions, a lot of emails about CGXF, people saying that I'm down on it, it keeps going down, what should I do? Well, this should make you feel better. I'm down on it too, guys, and the best thing you could do, trust me on this, okay, trust my experience, is nothing, okay? The worst thing you could do is think about it, waste mental energy on this, and just even worse, panic sell and actually realize this loss. So CGXF is gold producers, guys. Gold is down right now. Gold producers do not do well when the stock market does really, really well. So this fund, CGXF, is doing exactly what it should be. And trust me, when the next stock market correction or crash, you'll see a big reversal here. So now let's check out my TFSA real quick. Here's my TFSA, guys. So I'm pretty much broken even on this account. Not that I really care. Like I said, we typically try to put our very high yielding stuff in our TFSAs. So a lot of people ask me, what should I put if my my TFSAs are full? What should I put in a TFSA versus a cash account? Well, the honest truth is it doesn't really matter. We personally just try to put the highest yielding stuff in the TFSAs because it's all tax-free income and it helps grow the TFSA room as well, right? So here's the TFSA, every single holding that I have, guys. Now let's check out Erica's account, my wife's account real quick. So here's my wife's non-registered cash account, guys. She's pretty much up. Look at that, very, very identical, up 19% here. And the fund that she's down on the most, not surprising, is actually the other speculative cannabis ETF that I have, HMJU, down 40% on it. So that just gives you the lesson, guys. Don't speculate. So luckily for us, the three speculative positions that we have are all in cannabis, and they make up a tiny percentage of our overall portfolio. But I'll show you that in a second when I show you the Excel file. So this is really just to show you the account here, how it's doing. So let's quickly check out the TFSA as well now. So here is our TFSA account, which is doing really, really good, much better than mine. But keep in mind, this is it's doing better because a lot of these funds we've invested in 2020 when the market was down. So we have really good book prices. And as you could see by the holdings, right, it's mostly the really high yielding split funds we have in here. So again, we try to keep the highest yielding stuff in our TFSA. All right, so now that you've seen the actual proof, right, you've seen the 4 accounts, now let me show you the Excel file, which is going to give you a bird's eye view of all 4 accounts together, all positions combined, so you can actually see all my portfolio from A to Z, my income, my yield, my monthly income, annual income, etc., etc. So let's check it out together. So here is a bird's eye view of my portfolio, guys. So it has 3 sections. So you really have this is just the annual summary. So every year I track my capital gains, and this is not capital gains income. Okay, all the income is tracked under the dividends here. So I want to track my capital gains if ever I've sold anything, which I'm planning not to do going forward, as well as all the income. So all the income I made that year is classified here under dividends, and the profit is simply these 2 numbers combined. So I've gotten some questions in the Facebook group asking me, well, there's not much dividends in 2013 and 2012, 14, 15, 16, and it's simply because back in 2011 to all the way to 2017, I wasn't really an income investor at all, or a dividend investor at all. I only really started to go all in this strategy at the end of 2018, beginning of 2019. So you could actually see the jump here in dividends from 2018 to 2019. And when I really put in a lot of money is when we sold our condo and invested all the money. So we did that. Like I said, we reached our financial independence in December 2019. So that's really what gave us our financial independence. We sold our condo, invested all the money, and that's why you see in 2019 there's a little bit of a jump, but it's really in 2020 during the stock market crash where we started making a lot of income, right? We'll go from 11,000 to 47,000, and you actually see a capital loss in 2020 of 34,000. So you might be asking, well, where does that loss come from? Well, like I explained several times, I've been learning as I go also. Nobody's perfect. I'm also on my own journey. And in 2020, when I first you could even check out my first portfolio unveil. You could actually see it. I had over 120 stocks and funds, and half of them were single companies, single dividend stocks. So this is what I've been doing a big cleanup on and been getting away from, because a lot of the income damage, or the income cuts or dividend cuts I got in 2020 during the crash all came from the single stocks and single funds. Though this is why now I have like 40 of stocks and funds in total. So The 34,000 capital loss is really because of that cleanup. So I took capital losses along the way, but I really didn't mind because capital losses, guys, don't forget, and this should encourage you if ever you have capital losses and you want to sell some single stocks and transition into what I'm doing here. Capital losses, guys, carry forward forever, and they could carry backwards up to 3 years. So basically what we did in the tax year and tax season, we've actually went back and offset these capital gains in the last 3 years. So you have from 2017, 2018, 2019, we had about 18,000 capital gains. So we offset those and got a big tax refund because of that. And now in 2021, and I'll show you guys this in a second, we actually have some capital gains from some other sales that I've made. So I've been selling, and I'm continuing the cleanup, guys. So sometimes I'll sell a single stock or a single REIT that I have and to invest it in a fund. So I only have 10 single stocks and single REITs left in my portfolio, but we'll talk about all that in a second. So basically this $34,000 loss is completely nothing. It's completely nothing because we've offset these capital gains, and we're going to offset the rest of the losses with this year's capital gains, simply because capital losses carry forward forever. So just keep that in mind. So that's the first section here. So this is really the second section, the portfolio itself. And the third section is really the entire summary. So now let me minimize it, make it nice and a little bit bigger. So we'll go through the entire portfolio. All right, guys, so here it is. Let's go through it one by one here. And don't forget, you could download this file, this portfolio, on my website if you want to follow along, because it's too small and you can't really see it. So first of all, this column here, let me just explain the columns here, is simply the name of the fund. If there's a little star, it means it uses the covered call or an option enhancing strategy. This is the symbol, right? The stock ticker, the stock symbol for each fund. As you can notice, they're all highlighted because if you click on it, it will bring you to the fund's website directly. This is really my take on the fund. So this is just some information. I try to give the sector and the region that the fund covers. So this is basically, think of it like an quick information on each fund. My investment. So this is how much money I put into this fund. The weight on the portfolio, right? So 45,000. That means it's 6.37% of my entire portfolio. Number of shares that I have. My book price, so this is my share price, the share price or my average share price, not the current share price. I just want to make that clear. And this is also my yield or my dividend or distribution yield that I'm currently getting, which is based on the book price. So again, this is my book price and my yield, not the current stock price and the current yield. This is the annual dividend. So it's the dividend, the dollar amount per share on an annual basis, and then you have the annual income and the monthly income each fund provides. So let's go through them. As you can see, they're separated in sections here. I got my income funds, or the proper way to call them is really closed-end funds. So let's go through the closed-end funds first. We're starting with probably my most favorite closed-end fund of all time. This is an OG in my portfolio. It's the Canoe Financial EIT Income Fund. So this is one of the biggest, if not the biggest, closed-end fund in Canada. It invests in North American, or primarily North American, dividend stocks or value stocks. So it has all blue chips and a really great fund. It's been around for a really long time. And as you could see, right, it has a big weight for a reason, because it's one of my favorite funds here. Then you have DS and eit.un are the next two. So these are closed-end funds by Quadravest. So Dividend Select 15 Corporation, DS, holds 15 Canadian dividend stocks. It's really the twin brother, if you will, of their popular split share fund Dividend 15. It has pretty much the same stocks. Inc.un, also from Quadravest, is just financial. So it has 25 plus North American financial stocks. So it has Canadian and US financial stocks in there. So I really like these two funds. They have a very unique distribution policy where it basically, your dividend changes every single month, and it's based on the share price. So if the share price goes up, the dividend goes up. If the share price goes down, your dividend goes down. So how do you calculate it? Well, it's basically 10% of the share price. So whatever the share price is, take 10% of that. That's the annual dividend divided by 12, and you will get your monthly dividend. So that's why it's really, they're highlighted here. And I even have the comment, right? Monthly dividend varies 10% of the average stock price within the last 3 days of the trading month of the month, right? So I'm doing really, really well on these because I especially eit.un. As you can see, I have an enormous 20% yield on that. No, that's not a joke. It's completely real. It's because my book price is $7.57, and right now the fund is trading at like $16. However, so basically, since the dividend is based on the share price, it goes up and up and up. So it's very high. So that's why I have a 20% yield. But eit.un is one of those funds that's trading, even DS, but not as much. But eit.un is trading at an enormous premium. So I would personally stay away from eit.un right now, currently, but it makes sense because it's all financials, and financials are doing very, very, very well right now. CLM is one of the 3 US listed funds that I hold in this portfolio. So I have CLM, QYLD, and RYLD. So most of the US funds that I own, I really like the US funds. If I was, if I could choose between investing in Canada or in the US, I would definitely take the US stock market. But I don't have many US listed funds in here because there's that 15% withholding tax to pay on any income or any dividends you get. So almost all my US listed funds, I hold them in the RRSP account because there's no 15% withholding tax there. So CLM is one of the really high yielding funds on the US stock market. It's been around for a while, and it has a crazy dividend policy where they reset the dividend every year at the end of October. So the reset is actually coming in the next 2 weeks, and they reset it to 21% of the fund's NAV. So like the comment says, so whatever the NAV of the fund is, apply 21% to that, and that will be your annual dividend. So the annual dividend right now is $1.92, but it's actually set to jump in the next couple of weeks. So if you're asking what am I talking about, well, I'll show you real quick here. Here's the net asset value. I'm on CLM's website. You just click on this link here, net asset value, and you can see the NAV, or what the fund is actually worth, is $10.03. So it's going to reset in 2 weeks, guys. That means that if it stays about $10, what's 21% of $10? Well, it's $2.10. So if we go back here, the 192 should actually become 210, which means my income will go from 227, if we just hit enter, to 248, which is a nice big increase. So I know there's a lot of people skeptical about CLM. They say, oh, the dividend keeps going down, the share price keeps going down. Well, guess what? The dividend is gonna go up for next year, which is awesome. So I absolutely love CLM. I got 20 grand in here, and unfortunately I do have to pay the 15% withholding tax, but I'm still making 13.54% yield. That's including the 15% withholding tax. If you look at the actual formula up here, you can actually see times 0.85. Well, that's just me removing 15% off the yield, and 15% is also removed from the income as well. So 227 is, I'm actually making 227 Canadian. FAP is the last one in the income fund. So FAP is really, I put a little bit in here, 10,000, really to give some exotic exposure and diversification to my account. So it's one of the very, very, very few funds, or pretty much the only fund that's really fixed income. So it's not stocks, it's bonds here. It's Asia Pacific corporate and government bonds. So we're talking about, China, Australia, all those countries in the Asia Pacific region. And the reason it has a pretty good yield, I'm making 9%, and it's pretty close to 9% right now. It's like 8.7 or 8.8 right now, is because the fund uses leverage. So what I really like about this one is that it's always trading at a really big discount. So like we saw CLM, right? CLM is trading at a big premium. So the share price is 13, 14, but the actual value is $10. So it's actually trading at a 31% premium. You got to pay a big premium for CLM. But for FAP, it's the complete opposite. So if you scroll down here, the value is 365, but the market price is 303. So it's actually trading at a 16 or almost a 17% discount, which is really, really cool. So that's why I added 10 grand here. Just to give some diversification. Now onto the ETFs, of course. All right, guys, so let's go through the ETFs. I did make one change recently. I sold one, a real estate ETF called IDR, from Middlefield. I sold it, not because I wanted to sell it. I call it sell, but it really was to swap into another real estate fund, RS. So I'll talk about that in a second here. But so let's go through the ETFs one by one. The first couple ones here are from BMO. I really like the BMO covered call ETFs. As you can see, there's stars next to all of them. So every single ETF in here has a covered call strategy or an options strategy, which is really to increase the income. So ZWC covers Canada, right? It has 35 Canadian dividend stocks. Yes, they lowered their dividend recently from $1.32 to $1.20, but I'm still making 7% yield, and I'm just going to keep this one for sure, long term. It's still a really good ETF, and it has a lot of the best Canadian dividend stocks. ZWG is so where ZWC focuses on Canada, ZWG focuses on the entire globe. So it's called the Global High Dividend Covered Call ETF. I really like this one. It has 50 global dividend stocks in here. So you have US, Europe, Canada, Japan, Australia. So you have a lot of great regional diversification as well as sector diversification. ZWU for utilities and telecom. So I absolutely love the utilities and the telecom sector. So this fund covers utilities and telecom in North America. So we're talking about Bell, Telus, Rogers, AT&T, Verizon for the telecom, and it has all the electricity companies in there: Fortis, Emera, Algonquin, Hydro One, even Duke Energy and Southern Coal, the US ones as well. Brookfield's in there. So anything to do with utilities, telecom, and even pipeline companies like Enbridge, TRP, Pembina Pipeline, Kinder Morgan, I think they recently added in the US, is all in this fund. ZWK is purely financials. It's the big US banks. So I really like this fund as well. I was lucky enough to buy it during 2020. So I got a really big yield on it, 10%. Right now the yield is about 6.5 or 7%. And this one also recently reduced their dividend just by 1 cent in October. So I'm still leaving it at $2.16 for now. I didn't lower it here because I want to make sure that it's not something temporary. Because if you guys actually look at any BMO covered call fund and you look at the history, you'll see that there are some fluctuations sometimes with the distributions, but really nothing to worry about. So that ZWK is where I get my US financials or US bank exposure. Last but not least, ZPH. This is what I would consider a safety ETF. So I recently released a video and you guys really liked it. There was a lot of views there, a lot of comments, because you guys wanted to know what I think are the best safer or safety ETFs out there. So ZPH is my go-to when it comes to safety. It's the BMO US Put Right ETF. So unlike everything else here, it doesn't really do covered calls. It does put options. So it doesn't hold anything. It just writes put options on big US stocks. So check out that video where I explain exactly how that works in detail. But this is basically my safety ETF, and you'll still get a nice 7%, which is really, really awesome. Now moving on to the CI Global Asset Management covered call ETFs. There's 4 of them in here. So these, unlike BMO, which tend to be more region-based, these are really specifically sector-based. So FLI has the biggest North American life insurance companies in the US and Canada. So Sun Life, Manulife, Great-West Life, MetLife, Prudential, Lincoln, all the best, the biggest North American life insurance companies are there. TXF has all the best technology companies in the world, 25 of them. So Apple, Microsoft, Oracle, Nvidia, you know the chip makers are there. Zoom is in there. Really the best technology companies all in one fund here. NXF is where I get my global oil and gas producer giants exposure. So this is pure energy. So you have Shell, BP, ExxonMobil, Suncor, etc., etc. Eni is there as well. So the biggest oil and gas producers in the world, guys. CGXF is where I get my materials or gold producer exposure. So it has the 15 biggest global gold and precious metal giants. So Barrick Gold, Yamana, Endeavor, Newmont, Wheaton, all the best, just the big guys. You could tell because they have giants after in the name, right? So that's basically what it is. And gold, I know, guys, like I mentioned earlier, CGXF, a lot of us are down on it. but it's doing exactly what it's supposed to be doing. Gold producers should be down right now because we're still in a bull market. We're still at market heights. Where this fund will start shining, no pun intended because it's gold, is during a stock market crash or correction. So this is kind of like a hedge against the overall stock market. So one thing I want to mention, and that's why they're highlighted in blue, these are the only ETFs I have in my portfolio that are quarterly payers. Everyone else is a monthly payer. So yeah, it's a bit annoying, and the quarterly payment does vary. That's why it's blue. So this dividend here is actually the average of the last year, but the yields are really, really high. However, so these are, I wouldn't ignore these funds just because they're quarterly payers instead of monthly. The next two are from Harvest. These are my two favorite covered call ETFs from Harvest. So the first one is their biggest fund, is HHL, which covers healthcare companies. So the biggest 20 global healthcare giants: AstraZeneca, Johnson & Johnson, Pfizer, Bristol Myers, Abbott Laboratories. So you have the big pharmaceuticals, but you also have some medical equipment companies in here. So really the best of the best when it comes to healthcare. HUTL is utilities and telecom, just like ZWU, except it's global. It's not just North American utilities and telecom like ZWU is. So that's why I added HUTL, because it has a lot of utility and telecom giants in Europe. So Norway, Spain, Germany, it has a lot of European telecom companies. So HUTL complements ZWU very, very nicely. HDIV now from Hamilton, one of a newer fund in my portfolio. It's really amazing. I love this fund. I made a video 2 months ago on it, and I also have a special treat for you guys coming up when it comes to this fund, so stay tuned. So this fund is actually 7 covered call ETFs in one, and on top of that they use leverage. So you have ZWB, which is from BMO, the big 6 Canadian banks; ZWU, which I already have; utilities; FLI, already have it; life insurance; NXF, have it; oil and gas producers, energy; HHL, have it; it's the best healthcare companies. HTA is very similar to TXF technology, and HEP is pretty much identical to CGXF, gold and precious metal producer. So this is an amazing ETF. It basically has 7 covered call ETFs in one, and on top of that they use leverage, so they target an 8.5% yield. So I think this is really going to be a rising star in my portfolio. And last but not least, the last two are the other two US listed funds besides CLM that I have: QYLD and RYLD. I love these funds. I talk about them all the time. QYLD is the biggest covered call ETF on the US stock market. I think it has over 4 billion of assets. It covers the NASDAQ 100 index, which is, it has a lot of the big technology companies are there: Apple, Microsoft, Facebook, Amazon, Tesla. And RYLD covers the Russell 2000 index, which is a index that measures smaller to medium-sized companies in the US. So you literally have exposure to 2,000 corporations. So I absolutely love these funds. And yes, I have to pay the 15% withholding tax, but I'm still look at the yields I'm making on them. That's including the withholding tax. So really high yield here. Now let's move on to the split share funds or split corporations, everyone's favorite, right? All right, the first two are from Quadravest. So DFN, that's their flagship fund, their biggest fund. It's a DFN, so Dividend 15 Split Corp. It holds 15 Canadian dividend stocks, the best companies in Canada, and it's an exact replica, basically, of DS, right? Dividend Select 15 Corporation. The biggest difference is really the dividend policy. So DS is a lot lower risk because it's not a split share fund, so it doesn't have that $15 unit NAV threshold rule. So DFN, definitely Quadravest's best split fund in my opinion. 25K in here. I might be adding some soon, but we'll see what happens. So the weight is 3.6% here. FTN, that's the financials one. So Financial 15 Split Corp, 10 Canadian financial companies, 5 US financial companies, really the best, biggest banks in the US, right? There's Wells Fargo, Goldman Sachs, Morgan Stanley, and the Citigroup, and the other ones as well. So these two I got 25K each here. The next ones are from Brompton. I really love the Brompton split share funds. So you have LBS, which is once again financials. So it has the big 6 Canadian banks and big 4 life cos. SBC, Just has the big six Canadian banks. GDV has to be my favorite split fund of all time, guys, and that just shows, that's why I have a little bit more in here. So GDV, in my opinion, the best split fund of all time because of its diversification. It has global dividend growth stocks, so it's very well diversified in terms of sector and region as well. It's basically a split share version of ZWG, but obviously with a lot more yield because it's a split fund, right? It has about 10% yield. So awesome fund here. DGS is definitely the biggest risk, biggest reward split fund I have in my account here. So I only have 5K. So DGS is basically Brompton's version kind of DFN or the competitor. So it focuses in Canada, but it has mixed sectors. What I like about it compared to DFN is it has a lot more stocks. So it has a lot more diversification compared to DFN, which is very financial heavy. DGS is a bit less financials heavy. It has other stuff like industrials and etc. PWI is a newer split fund from Brompton that invests in sustainable power and infrastructure stocks. So basically a good way to get some green energy exposure. What I don't like about it is that it's always trading at a premium, and the yield is pretty low, right? It's pretty much the lowest yield out of the split funds I have. But still a very good play, or the best play that I found for green energy and to actually get yield, because it's very hard to get yield with green energy. And the last two from Middlefield, so you have ENS, which is the eSplit Corporation. This only has Enbridge. This is how I get my Enbridge exposure. I absolutely love this split share fund. It's awesome. It's the best way to invest in Enbridge, in my opinion. Very high yield. And then you have RS, which I have an enormous stake in here, 7.69%. And like I mentioned earlier, I sold IDR, the IDR ETF, which is a real estate ETF, also managed by Middlefield, to swap it into RS. So that's why I have a really big position in RS. So if you don't know, I personally don't own any real estate, like physical real estate. We rent. So my portfolio is pretty heavy on the real estate here. So this is where I get my real estate exposure, RS. So if you're wondering what the colors are here, so orange is if I've missed any dividends on the funds, and green is if I did not miss any. So in every single comment here for every single split fund, I show when the first dividend was paid out, how many dividends did this fund miss, if any, and which months did I personally miss. So you have all that information here if ever you want to check it out. It's all updated. So so these are really my main positions, guys. The next funds I have here, the next stocks, are really the only single REITs and single stocks that I have left. So I'm not going to go into them one by one, but I do have I do want to mention that I did sell off Nexus REIT, which was an amazing REIT that I've been really done a lot of capital gains on. So why did I sell Nexus REIT? Well, it's because I made a really big capital gain on it and I reinvested it primarily in RS. So like I mentioned before, I'm getting away from single REITs and single stocks. So although I really love all the single REITs and single stocks that I have left, for me, they're all fair game, right? So if you actually, I'll quickly show you, I have another tab here, my portfolio tracker, where I actually track what I buy and sell. And as you could see, I did sell the Nexus REIT here in August to make an $8,000 profit, and I redistributed it here. So I put 10,000 in HDIV, 5,000 in GDV, 5K in EIT, and 5K in each NXF and CGXF, which were picks of the month in August. And in September, like I mentioned, I sold IDR, and that's where I bought the RS. So I bought some RS, and the only thing I bought so far in October is a little bit more RS just to get to the 55K here. So in terms of my speculative growth positions, we saw it earlier, right? When I showed you my broker accounts, I have 3. I'm up significantly on cannabis growth. By the way, all 3 are cannabis related, but I'm down on HMMJ. I'm down $2,000 here, and I'm down $4,000 on HMJU, which are both ETFs by Horizons, which invest in cannabis companies. So HMMJ is not leveraged. HMJU is heavily leveraged. You know, that's why there's a 2x daily bull. So I'm just waiting, and I'm going to be selling these off whenever I feel like it. I'm just going to wait until cannabis recovers. There's no chance in that I'm going to be selling them anytime soon until they recover. And cannabis is really at all-time lows right now. So my total income is $77,108 a year, which translates to $64.25. So I'm at $64.25 a month, guys, in passive income from this portfolio. Now let's just check out the portfolio summary together. So real quick, guys, my portfolio summary is here. There we go. I might be blocking it. There you go, guys, just to make sure that my video is not blocking anything. So this is the overall summary of my portfolio. So how much money did I invest? How much of my own money that I put in? So this is my principal, not what my portfolio is actually worth, but how much money I put in. So we're talking about 716,000 here. My annual dividend yield on average is 10.77. Another thing I failed to mention is that I actually took out, I had HMMJ, the cannabis ETF, part of my main portfolio, but I just took it out and put it at the bottom and took it out, so it's into the speculative growth position. So this what I'm showing you here, guys, is doesn't include the speculative positions, right? Because there's no dividend income in there anyway. So 10.77% yield overall. My monthly income, my monthly passive income, 64.25, and the total dividends that I have received so far is just under 120,000. So I literally made 16.53% of my initial investment back just in dividends. And you could also see the breakdown of my portfolio by stock type. So 15% closed-end funds or income funds. The bread and butter are really the ETFs at 34, a big chunk in split funds as well, 31. And I still have, like I showed you, 5 single REITs, 5 single stocks, but together they only make up about 18% of my portfolio. And like I mentioned, I could be selling more down the road whenever I see fit. So there you have it, guys. So there you have it, guys, my entire portfolio in black and white from A to Z. So as you could see, especially if you're a long-time follower of my channel, I own what I preach, right? I wouldn't feel comfortable suggesting you guys funds and stocks without first owning them myself. So as always, guys, please support me. Please support this channel by hitting that like button. It's quick. It's free for you, and I would really appreciate it. And of course, visit our website, passiveincomeinvesting.ca. That's where you could access my digital product, the Ultimate DIY Investing Package, which is basically all my years of research in one tool. Think of it like a companion or a reference tool that will help you guys, either Canadians or Americans, to build your own portfolio. So it has over 175 ETFs to choose from, closed-end funds, split funds, and the biggest upgrade I made in the current version 3 that was just released a few weeks ago, is I have a lot of sample portfolios for you guys. I know you guys love those sample portfolios, so I have 7 for Canadians and 7 for Americans. So whether you want to invest for income, for growth, for dividends, if you want a balanced approach, if you want a low risk income approach. So I have a bunch of sample portfolios which are tailored to different investors. So make sure go on my website, passiveincomeinvesting.ca, and check out and read the product and what you'll get. It's only 59 Canadian dollars. It's very, very cheap, and it could save you many, many, many hours of time. Also on my website, right there on the homepage, you could book a one-on-one consultation with me personally via Zoom. So if ever you have a million questions to ask me, if you're new and you're struggling with investing, if you want to transition into an income portfolio like I have, or if you want to build your own portfolio, for whatever reason, guys, you could book a one-on-one with me. It's on my website. And right now I'm completely booked for October, but the November appointments should be opening up soon in the next couple of weeks. So I'll let you guys know via our Facebook group, Passive Income Investing Facebook group, when the November slots are open. So speaking of Facebook, make sure you join our Facebook group, Passive Income Investing. The group is growing. There's over 4,000 members now, which is great. A lot of great questions, and people are all helping each other out. It's really, really awesome. I really appreciate you guys participating in that. We're also on Instagram as well, so follow us there if you use that social media platform for updates. Finally, guys, make sure you're subscribed so you don't miss out on my future content, my future community posts, my future surveys of the month. So every month I release a survey to ask you guys what topic you want me to cover next. So you just need to be subscribed for that. And the mission The mission of this channel, my mission, will always remain the same, guys. It's to help everyday normal working people to invest on their own so they could create their own source of passive income to enhance their quality of life and eventually become financially independent. So with that, take care, guys. Continue to stay safe and see you next time.